The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, well, the crypto sector is still reeling from a string of votes in the European Parliament that some warn could prove regulatory overkill, unworkable, and destructive to the industry, though others say crypto companies must learn to live with privacy-busting regulation. Joining us now is Joshua Ellul, chairman of the Malta Digital Innovation Authority and director of the Center for Distributed Ledger Technology. Hello, Joshua. Thank you for joining us. So maybe you could talk to us a bit about what is the EU regulatory environment right now?
So there are two main issues that are ongoing that need some consideration. One is the recent vote that happened in regards to whether we should be putting in some place some regulation to decide whether proof of work can operate within the EU and to what extent, due to environmental considerations. And the other issue is the amount of regulation that unhosted wallets need to abide by, and compliance procedures that unhosted wallets would need to abide by through enforcement through regulated exchanges.
So, Joshua, the proposal is some people who are proponents of the proposal say, look, these regulations aren't onerous at all or shouldn't be onerous at all for crypto companies, considering that the whole thinking behind crypto is it can handle, it's scalable, it should be able to handle this kind of amount of data, et cetera, and then some. So why the pushback? What do you say to those people who say that it's well within reason to ask crypto companies to accumulate this kind of data on users, on counterparties, et cetera? What do you say to them? And why is there such opposition when it's kind of the whole thinking? It's like, hey, this is going to replace the financial system. Shouldn't they be able to handle this?
Definitely. So I think the issue is that we need to start with why is regulation being imposed? So regulation is there to protect society, protect the market. And when we're talking about crypto, we're talking about the exchange of funds, and now we're trying to make sure that there's no illicit activity associated with these transactions. And the question that we should be asking is, do we really need more regulation when it comes to crypto than there is on traditional finance and when there is on cash transactions? Why is the crypto space being discriminated against to have more regulation than traditional finance and also cash transactions? So I think we should really be starting to question the principle why we're over-regulating this space. And just like Tigran said in the previous segment, cryptocurrency and all transactions on public cryptocurrency ledgers are available for everyone to see. They're transparent. Now, all of this information can be used by investigators to find illicit activity after the fact, without requiring any form of compliance checks from exchanges. So really, I think we should be seeing whether we can put in place less regulation when it comes to cryptocurrency, because it's completely transparent. Now, can crypto companies? Yep.
I have to push back here a little bit, because in the EU and the US, banking sector is one of the most regulated sectors in the entire economy. Particularly in the U.S., I mean, for instance, but also in the EU, down to, what kind of services they can provide, what they can do, how they hire, whom they hire, where they're located, what kind of reporting they have. I mean, for many banks, they're like, look, this is onerous. And it's, in many ways, crypto said, oh, well, this was created saying, well, the banks are regulated to serve themselves, because in other words, a sort of like government banking complex is conspiring together to oppress the masses. Therefore, crypto has to go around it. And in response, the governments are saying, hey, you know what? There are some social issues involved in finance that we want crypto to abide by, because not having that kind of regulation is bad for the societies we're supposed to represent. So to say that like crypto is unfairly regulated or overregulated compared to I mean, if you're going to compare it to the financial industry it's set to overthrow, it's still relatively under-regulated on that basis.
Definitely, that's because it's a new sector. But what is being imposed at EU level is to provide more compliance. So when it comes to transactions of a lower value need to be registered. Why is it different if it's crypto rather than a bank transaction? So I just think, in the very least, regulation should be across the board of the same level when it comes to transaction amounts. Now, the only thing that I think regulators should be keeping into mind is that, unlike banking systems, unlike financial transactions that go through the traditional path, cash transactions, crypto has an immutable, transparent log that is there forever. What more do we need to comply? I mean, it's completely transparent. So I think the regulators need to keep this in mind. What is the potential trade-off of over-regulating? Companies, users will not want to participate in a jurisdiction where it's hard to undertake business, and they will go elsewhere. So that's the only thing we're going to achieve if we do over-regulate at this particular point.
Just to follow up on that, can you specify when you say overregulation, like specifically, what is the absolute worst case scenario in Europe, and what is the likelihood of that happening?
So let's say globally, the absolute worst case is a ban, and we've seen countries try this, and you can't enforce a ban. We're talking about decentralized systems. So at the worst case in Europe, I think we're looking to have all transactions registered, right? I think the limit that was being imposed was something like 1,000 euros. So in the worst case, this is going to mean that our crypto exchanges are going to be overwhelmed with compliance-related issues, just like banks and our other financial institutions currently are. So the worst case is that all of these exchanges decide, and the users decide, that they don't want to use these platforms because it's just too much of a headache. So I think that is the main worry. And I think regulators, like I said before, we're talking about transparent data. We do no longer need to get all this data on KYC. We can get KYC when it's actually required, not for every single transaction. And when we're talking about banks, remember that investigative powers need to ask every single bank in a particular network for information when they require it. You don't need to do that with crypto. You just go onto the ledger and get the information you want. Then you need to make the connection to the real world. That's the part that requires some effort. But yeah, I think we should start to think about new types of regulation for this new types of decentralized networks.
So how do you see the follow through with the EU Parliament? How do you think it'll end up?
Yeah, I'm not quite sure how it will end up, but I do think that the EU will push through with this regulation, and then it's up to the ecosystem to decide whether they remain in EU or whether they go elsewhere. Now, even if they put this in place, do the regulators in EU have the resources to oversee what is being proposed? I'm not too sure about that.